What is good, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's going on with the overall market, what's going on with Tesla, SPY, Nvidia, the QQQ, and a couple of other tickers, what's happening with the CPI numbers that just came out, how this is affecting the market so far, and some very important reports to be looking at. But before I do anything like this, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon. It ends in just about one day. It ends tomorrow, so check it out before they run out. Anyways, let's break down what's going on with the market. The market is very divided right now because CPI ended up coming out. It's very mixed, a little bit hotter than expected, just by a very, very tiny smudge. And overall, even though it was a tiny bit hot, it was still relatively close to expectations. So we're going to be seeing what the reaction is by the time the market opens. Because it was a tiny bit hot, this could lead to some downside, but overall articles are saying that the Fed may not change their policies as a result. But let's break down these numbers very, very quickly. So core CPI, we're going to start off with that. Year over year, it was at 4.3%. That is in line with expectations. Month over month, core was a little bit hot, up 0.3%, so a tiny bit hot, but still very, very close. Looking at the inflation rate month over month, that's CPI month over month, it was 0.6%. That is once again just a tiny bit on the hotter end of the consensus, a tiny bit hot. And then overall, the inflation rate year over year was 3.7%. That's a little bit hotter than what the expectation was of 3.6%. So you guys could see it was very, very close to expectations, just a tiny bit hot. Core was very close to expectations year over year, however, but overall just a little bit tiny bit hotter than expected. And so far, we're seeing these articles coming out saying that even though this is a slight increase, energy is causing it to go up like this. Energy is inflating CPI is what these articles are claiming. And they're saying that the Fed is likely not going to become more hawkish as a result. So it's very mixed. We have like the bad news technically that CPI was a little hot, but the good news is that articles are saying that the Fed is likely not going to budge because of this. So very mixed. Looking at the data, like from this chart right here, you guys can see there's a slight increase in August right over here. This is just the overall CPI, and you have the chart right here, which shows how it's looking. So all items are starting to show signs of increasing, but they're saying that this is because of energy, which is playing the big role. We actually have the numbers right here. All items are up about 3.7%. Food up quite a bit, but nothing like that insane. Very close to what we saw in July. Most of these are very similar except for energy. Energy is what is increasing like crazy for August, and that is what's causing CPI to go up according to the data. Besides that, core was aligned with the expectations, so nothing too bad. So far, as of right now, the market's very flat. It is trying to hold up as of right now, but from a technical standpoint, we are looking a little bit more bearish, especially if we break below the 200 EMA. But like I said before, I'm going to be very open-minded. We're going to have to wait and see how things are looking. So looking at the charts, I would just argue that SPY is very flat right now. If we manage to break and hold above our 50 EMA, 446.5, and we start pushing above this, there is potential for it to get back to 448 or even push higher. If we break and hold below the 200 EMA, if we break below 445, there is potential for us to test the 200 EMA at 444.8. And if that ends up breaking, we could start sinking towards 442, right? There is potential for a big drop. We could even drop lower if we break below the 200. The best thing to do right now is just wait because it's a very mixed CPI. There are very mixed views about it, and the market's very indecisive. So we'll wait and see which way we break. As of right now, we're kind of in the middle. We came down, then bounced a little bit. We're still kind of like stuck, but there should be a big move coming by the time we open. On Tesla, this thing is starting to gap up, but from a technical standpoint, it's looking a little bit weaker. Momentum is slowing down, so we're going to be watching to see how Tesla opens. If we could hold above this 270 resistance, you're going to be watching 272.5, potentially 275 to be retested. And if we break below our critical support at 268, we're going to be watching 266, 263.75, followed by 260. Now, what looks more probable for Tesla is this potentially slowing down still. The technicals are looking a little bit weaker on the 4-hour, so there's a chance that it may gap up and start coming down to fill the gap. There's a risk of downside for Tesla, of course, but just to be open-minded, you want to be watching to see if we do end up breaking below like 268 to get that confirmation. For Aapl, Apple's trying to gap up a little bit, but one thing that's a little concerning is we do have a valid head and shoulders as of right now. So we need Aapl to get above 180 and hold above and start pushing for us to make an attempt to invalidate it. So far, even if we are trying to like bounce a little bit, this could be forming kind of like an inverse cup and handle. So there's a risk of more downside for Apple. So I just want everyone to be very, very careful. Don't forget, we also have PPI coming out for tomorrow. So it's another like very, very important inflationary indicator. So we have more data for tomorrow. We'll see how that affects us. Apple's pattern looks more bearish. As of right now, it's trying to hold up. So we're going to be watching to see if we can try to get above like 178. However, the really critical level is 180. If Apple can get above that, then there's a chance for the bulls. If not, it's going to continue to range trade. If it breaks below 175, so watch that level, then we're going to see Apple start sinking to lower levels like 173.5. The pattern looks more bearish. It's making attempts to try to rebound, but just watch the resistance just to be safe. See how we open and just know that there is still a risk of downside looking at the head and shoulders. For the QQQ, it's the same thing. There's a potential, slanted head and shoulders that is developed on it. But just to be open-minded, let's look at these levels. So the 20 EMAs around this 374 level. If we manage to break and hold above this, there is potential for it to push up to 376 plus. If it gets to this rejection when we open and we start to tank towards 370, 370 is going to be a key level. If that breaks, it's going to start sinking towards 368. So we want to be open-minded. As of right now, it's holding between the EMAs. We'll see which way it breaks. There is a risk of downside thanks to Apple for the future. But for now, just watch the levels and we'll see which way we end up moving. Nvidia is still looking weak. We were talking about this yesterday, continuing to downtrend. It's now below our 200 EMA. Now, Nvidia is continuing to just, weaken as time goes on. And despite that, when you look at the charts, I think it's very important to just zoom out a little bit more. I just want to show you the weekly on it. Nvidia is still not necessarily a dead cat in the water. There's been a lot of talk about this thing being in a very nice accumulation phase still. But for the time being and for the shorter term, it is still looking more bearish. If you look at it, it's still, downtrending. We're hitting 447 now. Going to be looking to see how it reacts with the market. If it could try to get above 450, there is potential for it to push towards 455. If it continues to sink at these lower levels, there's a risk of it coming all the way down to 442 again. It's looking weak right now, so we're going to be watching to see if we can try to hold this pre-market low. Besides this wick, right, we have the 446 level. If it holds, there's potential for it to chop around. If it breaks, it's going to start sinking. So we're going to be watching what the overall reaction is once the market opens, because we have a very mixed report, a little bit more bearish, if anything, just a tiny bit more bearish, but just to be safe, we want to watch to see what the big reaction is. Now on the VIX is currently up just a tiny bit. We're going to be watching to see, does the VIX end up getting a rejection, come down to fill this gap, or does the VIX try to break above the 200 EMA? Going to be watching it once again, guys. So we're just going to see what the reaction is. SPY is starting to push a little bit, so is Tesla. But remember, do not solely trust the first move. We have to wait and see how we open, and we have to wait and see what more headlines are saying. Because there was a slight increase in CPI, it wasn't like extremely horrible. And there are articles saying that the Fed is not going to be raising rates again. They may pause from here. There were some articles I saw that said that. So we'll have to wait and see. Let's just see what the reaction is. SPY is trying to push now. Wait and see reactions to these big resistance levels. And if we manage to hold above our 200 EMA, if we get above 446.75, especially, we can really get a nice push up. Right. So we're going to be watching. And with that said, I just thank you all so much for listening. Have a great day, guys. Do what you have to do. And I'll see you guys in the next one. Thank you and peace out.